what do you hear from your clients on the sensitivity to what the Fed says in determining flows into emerging markets? How do you think this whole story will play out?
Yeah, if we take what our global or our US economists are saying, their view is that the Fed is unlikely to really do much in terms of changing the QE before the end of the year. So their view is probably it's like a 2014 calendar event rather than a 2013 event. At the same time, I think this time what the Fed will try and do is really try and convey their message a little more clearly. I guess what last time they appeared to say was that they are going to pull back the QE in a hurry. I think this time their feeling is that the Fed will try to be a little more clear and say that there is no real immediate necessity to pull back a QE. Of course, it will be very data dependent. And the other thing is, they said he'll probably sound quite dovish at the press conference, which is there on day after. So he'll probably try and soothe the markets a bit.
Do you sense any change in perception of India, though, Jyoti, given the earnings disappointment you were talking about and the kind of macro figures we've had recently? I mean, are people still willing to put money on India in the emerging market context?
The good thing for India at this time is that most countries are facing some problem or the other. Same way, just there are political issues in some countries. There are, growth issues in probably most of the countries in emerging market. So to that extent, India is, looking relatively better. In fact, the frustration people have is this was the time for India because, globally people think commodity prices are not going to go up, they're going to come down. And in that context, India looks like a good trade that, okay, if commodities come down, you want to be in countries which are commodity users. So the frustration people have is at the time where India could have really stood out in the world, it's not standing out because, we are having internal problems. Growth is not taking off, capex has slowed considerably. But at the same time, a lot of people end up wanting to be neutralish to slightly overweight India just because of a lack of choice.
Some people are talking about policy positives, though, Jyoti, especially with regards to infrastructure and clearance of projects, etc. I mean, you've seen what the numbers had to show. How would you approach industrials as a space?
The reason we are still not very bullish on it is that, the government is, taking some steps. The CCA has been clearing projects. So things are moving at a much faster pace than, they were a couple of years ago, even, last year. So to that extent, there's a positive change happening there. But at the same time, we are now very, very close to elections. To expect a real big capex surge to start at this stage is going to be very difficult. The other thing we have to remember, a lot of these companies which actually, do capex are sitting on debt levels which are very high. So for them to really go and start another round of capex, banks to be able to fund them will take some time. It needs some stress to go out of the system before we really see a big spell of capex starting through. So to that extent, we've not been very positive on the industrial space at the moment.
Is politics beginning to worry some of your clients, Jyoti? Because some of the recent moves which have happened, like the JDU getting out of the NDA, it all seems to be making it difficult for either of the two big parties to get to a reasonable majority number. Is there still a fear looming of a fairly fractured verdict which flies in the face of this reconstruction and capex cycle post-election results?
Yeah, for a lot of people, politics is something which has been always very difficult to call, whether it's in India, whether it's in most emerging markets. So it is one of the overhangs, and that's the reason everybody feels comfortable with, like, my view that the markets are going to be range bound. We're not going to see it fly off till the elections are out of the way. But if you look at history, if we go back to the last couple of elections we've had, markets have had big moves on the day of the election result. They were up 20% the previous time and down 20% effectively, more or less, in 2004. So to that extent, for people, elections are going to be one overhang. We don't know which way it is going, but at the moment it's looking like the chances of a non-Congress and non-BJP parties doing well seem to be quite high based on opinion polls. So people are watching it, but at the moment, it's still an event which seems to be far away. It's 9 to 12 months away. Things change quite a bit in politics as you come near elections. So people are hoping some good things work out finally.
What's the biggest risk to this market in your eyes, where the market does not remain in this trading range but actually breaks down?
I would think it's still, the current account deficit and the rupee, because the hope has been that the current account deficit would come down. In fact, that's what really triggered the rally in April when oil prices and gold prices started falling, that, okay, this is one big overhang which, most investors are worried about, RBI is worried about, government is worried about. And that seemed to be easing, that oil prices are coming down, gold prices are coming down, and probably we'll have much better numbers looking forward. But that does not seem to be happening. We just bought so much more of gold when the prices came down that the current account numbers are still looking quite bad. People accept growth is not going to be strong, so that is like a given. So it's, if the current account deficit can be fixed, or that number seems like it's coming down, I think it will give RBI more room to cut rates. It will ease some of the fears which people have on the currency.
Do you expect the other two characteristics of the market to remain, Jyoti, which is that it's always been, or it has been, a very narrow set of stocks that have actually rallied in any potential pullback, and that valuations have been extremely bipolar across sectors?
Yeah, you see, both of those are like the function of a change in the environment. So the day earnings start to pick up, the day the economy starts to pick up, a lot of this is going to change. Till that happens, typically if you see history in India and if you see history across the world, mid-caps don't perform well till the economy starts to improve and the markets start to rally. So mid-caps never lead any rally. It's like, first you have the big caps rallying, and then if the environment continues to improve, then the mid-caps rally. Same way if you see the defenses versus, the industrial names, it's now up to the industrials to start doing well, and that's when the whole valuation differential will start compressing. Because most people accept that the defensives are expensive, they're not very cheap, but at the moment there's no pull factor that, okay, the industrials are looking very good, so I want to go and buy them.
Do you guys have an internal target for the currency though, Jyoti? And I mean, is that up for question in terms of how much more depreciation it could see by the end of the year?
See, we are hoping from these levels we don't see too much of a depreciation by the end of the year. So, really the hope is that we have a current account which starts to reduce because oil prices have come down a bit and gold imports start to come down, because the government has clamped down really on gold quite a bit through all the credit measures that they've imposed. So we are hoping that starts to bear results, and as we move forward 3 months down the line, we see current account deficits starting to look better, and that starts to put some benefit on the rupee, and the rupee remains in a narrow range around these levels.
Thanks, Jyoti. Good to hear your thoughts. Thanks for joining in today. That's Bank of America Merrill Lynch with their thoughts that earnings growth this year will continue to remain tepid and the market will grind in a trading range.